Market today, NASDAQ down, S&P up. The Dow went up to challenge the highs. It did not move. It moved to a new closing high, but not to a new all-time high. The Dow was up 559 points, up 1.18%. Now, the Dow was helped by FedEx earnings going into the holiday season. FedEx was up nearly 5.5% for the session, helping the Dow rise by over 1%, 1.18%, whereas the S&P was only up 2.21%. NASDAQ was down as we continue to see the AI sell-off. The Russell was up 0.11%, and the VIX was down 1.82% to close at 17.28. We are still in earnings season. We have the Senate passing the bills to reopen the government, or bill, I should say. I thought they were doing it in a couple of pieces. I have to recheck that. But anyways, now that's heading over to the House, expected to be voted on tomorrow. So again, government shutdown is going to end, and then eventually we're going to get the economic data. And again, see any kind of negative numbers coming out of the jobs reports that are going to be released, going forward with inflation, going forward with the GDP. Again, the Treasury Secretary said the shutdown has already harmed the GDP going forward by about half. That's what he said there Friday. I think you're going to see negative numbers coming out of the jobs report. We've already seen weakness, and if we start seeing negative numbers or other economic data showing concerns, again, that could produce a sell-off. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site. If you could take a moment to do that, I would really appreciate it. With my channel, I don't have sponsors. I choose not to do that. They constantly contact you when you get a YouTube channel. I turn the offers down because I don't want to sell you anything. I just ask that you just do what you can to help out. If you follow the link below to take you to a secured site, and you can donate any amount you want or make it a recurring donation. If you do that, I thank you for your consideration for that. Take a moment to partner with me. I'd really, really appreciate it. Just real fast, this is the E-mini futures of the S&P. They're flat in after hours. This was the top on October 29th. You had a little divergence that set up there. Getting another one right now overnight, so I'm going to be watching to see what happens with this. We're setting up divergences on the hourly chart of the E-mini futures here. I'll be watching to see, because we got rising wedges now on the S&P 60-minute chart. Does that divergence here end up playing out? Does it give us a possible reversal with the rising wedge that's setting up on the S&P? We had a similar divergence on October 29th. So just want to let you know what I'm going to be looking at this with futures overnight and then on into the opening bell. Helped by FedEx earnings today, which were up sharply. Dow did not move to a new high, but it did get a new closing high. Previously up at these levels, we had topping tails, and the Dow could be masking what's going on with the NASDAQ with the AI sell-off. Well, the Dow was up today The Dow was up 1.18%. The transports is not. It's still diverging with the Dow. It's up 0.67%. And we still have a Dow theory sell signal, even in the more recent price action with the Dow and the transports. Dow's got that upper channel line directly overhead. It hit it previously, got the topping tail, got confirmation, but no follow through. And you have this larger divergence with the transports from late 2024, and the Dow made new highs. The transports did not. Transports peaked back over here in 2021. The Dow's moved higher. You got the massive divergence between them going back that far in the monthly time frame. This is the weekly right here. But the Dow only represents 30 stocks. Dow theory is good in that the principle of confirmation, the transports and the Dow need to confirm one another. That is a very important signal that works. But basing the market on the Dow representing 30 stocks, well, that's probably not the best representation of the market, but nevertheless, FedEx helping out the Dow today. The Dow rallied more than 1%, and the rest of the market did not. We have this channel with our linear scaling with the Dow. If we take it back even further, you have a massive rising wedge. It goes back to the 2022 low right here, connecting these 3 points, and then the high over here in our recent high that we had late October. I check the upper boundary trend line back further here. Again, we're slamming up into it. A large rising wedge going back here to the 2020 low. In the same scaling, so you have this rising wedge, you've got this resistance. And again, I've been talking about the resistance on the NASDAQ and the S&P. Touched on it briefly with the Dow and the Russell, but again, major resistance that you're rallying into. And again, so far, the October high is holding, but even if it doesn't, the Dow could camouflage what's going on with the AI sell-off with the NASDAQ. If we look at the log scaling with the Dow, you also have a upper channel line here that we're going into with our log scaling. That Dow theory sell signal is likely going to mark a reversal for the market, as they often do. Russell as well. The Russell has turned off of this upper channel line of resistance, the parallel boundary, these lows over here. Remember, the S&P recently made a new high on October 29th. The Russell did not. They diverged. That often happens at turning points. It's a Russell weekly chart, the IWM ETF. Russell had broke down from a rising wedge. Again, I talked about a peak over here with the doji into that resistance at the time. Got a lower high when the S&P made a higher high, and we're seeing divergence between the Dow and the transports and a divergence between the S&P and the Russell. Russell broke down from the rising wedge in backtest mode here, testing the moving averages just slightly higher today. By the way, the Russell has already gotten the 10 below the 20 period moving average. The 10 is a red, the 20 is a blue. Stalling. We got a hanging man candlestick yesterday on the Russell. It's not confirmed today. I'll be watching to see if it does end up getting confirmed. Do we get rejection off the moving averages and the momentum cloud, or a possible bigger backtest of the trend line? Regardless, again, going to be watching the moving average crossover here. Does the 10 eventually cross below the 50 here? Getting the crossover on the Russell, the S&P could be not far behind. Russell daily chart right here. Bullish percentage still negative, below 50. Again, when we saw that happen before, that's when we saw the sell-off of 21%. Told you on Friday we would go back up, fill the gaps with the bottoming tail on the 50-period moving average. You have to excuse my voice. I'm recovering from surgery. Still weak, still in pain a little bit. Anyways, as long as the bullish percentage stays negative in below 50, then the S&P is at risk of a much bigger drop. On Friday, we got the bottoming tail on the S&P daily chart at the 50 period. We got the topping tail here just above our 200 period on the VIX, and it's given us this pullback to the 50 period moving average. Right now, we're still above it. And again, when you're above the 50 period on the VIX, that's when you start seeing bad things happen on the S&P 500. So VIX pulling back, getting a higher low, while the S&P is making a lower high. Meanwhile, MACD is rolling over, but it's still in positive territory. We gapped lower, and we ended up with a bottoming tail at the 50-period moving average. I told you to be watching the gaps. If we go back and fill the gaps, or some of them, we could rally all the way up to the upper boundary of the cloud and still have a bearish signal with momentum on the S&P and the NASDAQ 100. Well, the S&P rallied big. Again, we got the news that the government shutdown was going to come to an end with a deal being reached. Now that's going on into to the House for a vote. We'll be looking for all the missed economic data that we didn't get. We've rallied back up, and we had that rally yesterday and then closed just above the 10-period moving average. And then today went up, tested the upper boundary of the cloud, and turned down off of it and stalled there, again filling yet another gap. I'll be watching the gap here that we had from Monday. I'll be watching the gap above today's gap. You'll see it in just a moment. And then I'll be watching, does the signal remain bearish and we resume the decline? or does this flip back to bullish? We go sideways, making a lower high to try to challenge this peak. We got a hanging man, it got confirmation, and we got a follow through. We got a follow through, watching to see if that peak at major resistance will now hold. And we got a reversal bar in the weekly time frame. We got confirmation. We need a follow through of that. Several gaps down, and I told you to be watching those gaps last Friday. Now we've seen this rally back up. Bars have turned blue, but the cloud is still red, showing we're going sideways. So here, momentum is still bearish, with the cloud being red, but we're above our 10-period moving average. Did get a green bar today on the Awesome Oscillator. If we turn back down, we can confirm a lower high. We turned off major resistance over here on October 29th. Pardon me, October 29th in the weekly time frame. As we're rallying back up, again, remember we got confirmation of our topping to our gravestone doji in the weekly time frame. But as we're rallying back up, we're getting red bars on the Awesome Oscillator, showing that momentum is starting to wane. Our stochastic has rolled over, and the MACD is getting ready to roll over, forming its own little divergence in the more recent price action. So again, I'll be watching. We get that follow through this week, next week, to take out last week's low. And if we do we take out the 10-week moving average here and flip the cloud in the weekly time frame to a bearish reversal of conditions. NASDAQ's got the same thing going on. It did confirm the topping tail in the weekly time frame last week. We need to see a follow through this week or next week, taking out the 10-week moving average. Let me lower this if I'm cutting off the peak there just a little bit. And then again, we've got our second Awesome Oscillator bar. The stochastic's rolled over. It's dropped below 80, by the way, on the weekly chart here for the NASDAQ 100. And again, our second red bar, MACD, likely ready to roll over. We're looking for a bearish reversal of conditions in the weekly time frame, either this week or next week. Confirmation of our reversal bar either this week or next week on the NASDAQ and the S&P. This is the NASDAQ weekly chart. Same thing in the daily time frame for the NASDAQ. Again, it has a bearish reversal of conditions. We got that bullish bottoming tail on the 50-period moving average on Friday. We gapped higher on Monday, but we're stalling at that 10-period moving average. And we were down today by 78 points, by 0.31% on the NASDAQ. We're stalling at the 10, S&P's above it. And again, we're just above that 20-period moving average. So if we end up going lower, do we see a crossover of the 10 and 20-period moving average eventually here on the NASDAQ and on the S&P joining the Russell? S&P got a green bar, but no green bar here on the NASDAQ. Do they eventually go negative? And we still have the gap up here that is not filled. We don't have to fill the gap. It's not required. You may not fill that gap for a very, very long time. But right now, we're stalling at that 10-period moving average and really gap resistance here on the NASDAQ daily chart. The S&P did fill another gap today at 68.92. We had the gap lower on Friday. We bottomed out. We rebounded back up and then got the gap higher on Monday. And now on the 5-minute chart, giving a little divergence that gave us a pullback. And now another one has formed here. And again, these are just short-term little divergences in the 5-minute time frame. It is forming as we're filling this other gap. Let me show you on the 15. If we zoom out, in order to have a self, you got to drop back below the 200-period moving average here in the 5-minute time frame. Backfill this gap and take that 200 out. Now, as the S&P rose back to fill the gap directly overhead, it formed a triple divergence, began to turn off of the highs at the very end of the session after filling that gap. And you have a divergence down here in the MACD as well, here in the 15-minute time frame, as we get the 50 crossing above the 200 here in the 15-minute time frame. We got this little rising wedge. We breached it ever so slightly. You can see it here on the 15-minute chart. A little bit harder to see on the 60-minute chart, but you got a rising wedge. You got the triple divergence and all that. So we'll see what becomes of this. rising wedge here in the 15-minute time frame. Again, you did get the 50 crossing back above the 200. You start losing those. Again, it could just be a sideways move for a counter trend. It did turn over here off of major resistance on October 28th and 29th. We slammed into major resistance in the weekly time frame. Look at it on the 60-minute chart. You can see the rising wedge. And again, we slightly breached it, a little harder to see right here with my trend line, but ever so slightly there on the 15-minute chart. We gapped lower on Friday. We filled that gap. Then we had a gap and go. I always want to watch a gap. Is it a gap and go, a gap and fill, or a gap and trap? We rallied into the cloud. I told you to be watching on Friday, in Friday's video, a rally back up to fill some of these gaps. I told you to watch the cloud. We're overthrowing that a little bit. Watch the moving averages in the daily time frame. We're overthrowing the 10 period a little bit. Filling our gap here, 68.52 today, right here. We have another one directly overhead at 68.92. I don't know if that gap will be filled or not. It may be filled at a later date. It might not be filled at all. It doesn't have to be filled. Had the rising wedge going into the peak, major resistance in the weekly time frame. You now have another rising wedge, so we'll be watching to see what becomes of this one. And if we do turn down sharply, again, our head and shoulders pattern still very much in play. I do not think this is the right shoulder. I still think you're coming down here to likely form a divergence on the RSI. But if we break down without getting a right shoulder setting up, then I would entertain the possibility of a slanted neckline. Wouldn't rule it out. I think it's less likely. I think you're coming down into this area and you'll probably form a divergence and try to rebound back up for another lower high for a right shoulder. If the pattern sets up, sometimes they do, sometimes they don't. If we just plow through this trend line right here, and if we plow through 65.50, the horizontal trend line, then I would entertain the thought of this possibly being the right shoulder with a slanted neckline, although I think it's less likely. So again, told you to be watching these gaps. Last Friday, I thought there was a good chance we were going to go back and fill some of these gaps, some of them or all of them. We did one there on, we filled the gap immediately there on Friday with the gap and trap here on the intraday charts, and then we filled the gap above that, Friday's gap lower on Monday, and then here on Tuesday, another gap. We're in this rising wedge. As we've come up and formed the rising wedge, we're getting very overbought here on the stochastic in our 60-minute time frame. And again, we've seen with the sell-off, the spread between the 50 and the 200 get very narrow. If you turn right back down and drop below them to fill this gap from Monday, to resume the decline, to take out the low from Friday, if the rising wedge plays out, then again, I'd be looking for a death cross this week if we see that happen, if we see this gap attempt to get filled from Monday and the rising wedge play out to resume the decline like this rising wedge played out over here. Possible head and shoulders in play still. Maybe this is a right shoulder. There's a question mark over that one for now. We had that divergence at major resistance here in the daily time frame. We slammed into major resistance. I'm watching to see, do we establish a lower high and come back and take out the 50-period moving average and the trending cloud of support? Again, I think we're going to see a dramatic sell-off back to the April low. I think that's likely going to take place in January at some point. Here we have not a smaller head and shoulders on the daily chart, on the 60-minute chart as I showed you, which would be the neckline right there, the head and shoulders. But we have this larger head and shoulders in play. If we see a dramatic drop, you'll be getting the right side of the head formation. I think that we're going to see something happen that's going to create a big sell-off, and then I think the Fed will panic, do jumbo cuts. And again, this is the roadmap that we're following from 2007, very, very similar. So, and then I think you'll get a massive rally back up, and Bitcoin's forming the same type of pattern. We have the broadening formation on the NASDAQ and NVIDIA. S&P turned off of that upper Bollinger Band, and then we got confirmation and a follow through. We got a bottoming tail, and we're filling some of these gaps. sell-off is to resume. If it's to resume, we got to drop back below the 10 period, back below the 20, and move to fill this gap. And then we've got to see the 10 cross below the 20 as we're already getting with the Russell. On the Russell, the 10 and 20 are moving down to attempt to cross the 50. It hasn't happened yet, but they're moving towards the 50. This marks our third winning day for the S&P 500. The S&P got that topping tail 2.5 weeks ago. We had completed the topping tail. It was the week of the Fed, and I told you to be watching for a reversal bar that week, and I told you to be watching for a turn off of the resistance levels, the weekly time frame, and then I told you to watch for a confirmation for a lower high and confirmation to set up. We got it. Now we need to see a follow through, and you need to take out this low to have the follow through of the confirmation bar. Take out the 10 period moving average here in the weekly time frame, and you'll have a confirmation and a follow through, and that's what's needed for a bigger sell-off. The 10-week moving average has been acting as support in the weekly time frame. By the way, NASDAQ got that confirmation. It got the topping tail and the shooting star, got the confirmation. Need the follow through either this week or next week. Drop below the 10-week moving average. Same thing on the S&P. We're turning off of major resistance on both of those weekly charts, the S&P and the NASDAQ. The Dow and the Russell as well, again, at major resistance in the weekly time frame. And as we got that topping tail on the NASDAQ 100, the Fed week, and it peaked October 29th, turning off of this upper channel line again from the 2018 to 2020 low, parallel boundary to the 2020 high. And that's where we're turning. You have this broadening formation that's developing. We've overthrown the upper boundary, and we slightly overthrew the upper boundary of the channel, got the topping tail closed below it, and then reversed off of it the following week, as you could see with that big red bar. Again, that gave us confirmation. We now need to see follow through, and if we get the follow through, the broadening formation will likely play out coming back towards the April low. The lower boundary here will get a bigger sell-off than what we had over here in February down to the April low. Now, same thing again. We got that topping tail at the upper channel line from the channel here that I've drawn from 2020, 22, 2023 to 2025. And again, that is excluding the shadow from the 2025 low connected to the 2020 low, excluding the shadow from 2022. Parallel boundary to the upper boundary of 2022's high, and we slammed right into that upper channel. And here you can see we came right up to the upper channel line, slightly overthrew it, turned, got the topping tail, the gravestone doji, confirmation. Again, I'll be watching to see what happens. This week's bar or next week's bar, do we confirm that confirmation reversal bar? We did turn off major resistance with the topping tails. The day of the Fed, we turned down and we got topping tails for the week. Told you to watch for that reversal to happen with the Fed near these levels of resistance. This is the S&P weekly chart. And we're kind of in backtest mode with our broken trend line from the April low. I've marked some support levels here, horizontal support from our previous high, and some of these previous levels of support. If we take out the 50 period and this horizontal support here at 65.50, we can begin to make our way down to some of these other support levels. Our 200 period is near the horizontal support at 61.47, which was our February high. Now the backtest was with our log scaling. If we look at our linear scaling, it's a little bit different. Again, the log and the linear. Here, if I exclude the trend line, again, we're just slightly, pretty much right on that trend line, or slightly above it, just above our 10 period moving average. So are we in backtest mode? And if we are in backtest mode, do we establish a lower high that comes back and takes out the 50, takes out the cloud, and starts moving towards some of the support levels I've shown you and towards our 200 period moving average? And this is the linear scaling of the S&P 500 daily chart. I have a bearish reversal of conditions with momentum, as I'm showing you in this video, for NASDAQ and S&P 500. And let me just show you what's going on with the signals as far as the short-term swing signals. NASDAQ here, still bearish. Even if NASDAQ tries to fill the gap directly overhead, here the signal would still remain bearish in all likelihood. Same thing here, S&P still bearish here, and S&P still bearish here. NASDAQ still bearish here, and NASDAQ still bearish here, but S&P turning back to bullish here. And this tells us either we're going sideways or we're going to try to go up. The signals are still bearish. I have a few more signals that I don't have time to show you them all, but again, I got a mixed bag of signals in this because we're sideways. So do we establish a lower high? If something like what we had back over here where signals turned bullish and then reverted right back to bearish. That was it. The signal turning push, and then it went and made a new low. It ended up making a divergence here, but do we see it revert right back to bearish? Lower high. Other signals are bearish. Some other signals are bullish. So again, we've got a mixed bag. NASDAQ, with the NASDAQ, I would not consider this a right shoulder. It's pretty lopsided as far as the slanting of a neckline is concerned. But the right side of the head formation still could be under construction. I'll be watching, again, do we stall here at the gap resistance and stall at the 10-period moving average and the cloud? We attempt to fill this gap right here directly overhead on the NASDAQ. If we look at our trend line on the NASDAQ with our log scaling, we're back testing it. With our linear scaling, we've gotten above it. This is the log scaling right here. Same thing with the S&P daily. Again, it's back testing the trend line with our log scaling. You've got the rising wedge going on here. Do we end up with a back test here, or do we try to go fill that gap, go back and challenge the high, or do we get a back test and turn down without filling the gap from the previous Tuesday? Well, S&P is overthrowing the cloud in the 60-minute time frame. NASDAQ has halted at it in our 50-period. Again, the spread between the 50 and the 200 is narrowing. So again, if we get rejection here and we can't come up and we can't clear gap resistance here, we are filling the gap here, down right there on NASDAQ. But if we can't clear the gap resistance here to try to fill the gap up here, then the path of least resistance would be down. And again, we have the gap from Monday. Again, still a head and shoulders top in play. If we clear the cloud, then this gap up here from last week comes into play, which would put NASDAQ above the 10-period moving average. It's got a candle of indecision today in the form of a spinning top. Now, had it been contained within the real body, it would have been a bearish Harami candlestick, which is a reversal pattern. So again, not perfect. But our low today was at the 20 period. Our high today was just under the 10. So we're trapped between the 10 and 20 period on the daily chart here for the NASDAQ. Now with the log scaling, with our broadening formation, again, we are back testing the trend line of the rising wedge. This massive broadening formation that we've had an overthrow move, and we've slammed into the upper channel of the weekly time frame, in the weekly time frame. Again, in order to sell off, you've got to take out these 50-period moving averages. We bounced off of them on Friday. So far, we have lower highs on the S&P and the NASDAQ 100. Now, I'm watching that same broadening formation on NVIDIA's weekly chart. NASDAQ and NVIDIA both have it. And if we see the broadening formation play out, S&P might form the head and shoulders. Bitcoin has a potential head and shoulders as well. This could evolve into a head and shoulders pattern as well, but this is NVIDIA in the weekly time frame. Now, NVIDIA was down, and we're seeing an AI sell-off. NVIDIA went up to resistance in the weekly time frame, slightly overthrew it, and formed that broadening formation. Slightly overthrew it. You got these topping tails and the rejection at resistance in the weekly time frame. We're now back below it. NVIDIA moving down 3% today, really 3%. And as we're getting the AI sell-off, people out there saying there's no AI bubble, poppycock. It's the exact same thing they said about the dot-com bubble. And again, a good majority of those stocks did not survive the bursting of the dot-com bubble. Good majority of them ended up getting delisted and didn't survive. We do have an AI bubble. Now starting to see it begin to play out. So again, NVIDIA down on NASDAQ today. NVIDIA had slightly overthrown the upper boundary, just like we slightly breached it down here, but then you went in the other direction. Okay, and again, after multiple years, and again, we slightly moved above it. Right now, we're back below it, back below that upper boundary. And again, that broadening formation is very much in play on NVIDIA. And I think we turn off of this trend line of resistance after overthrowing it. And you've got the Dow, the Russell, the S&P, NASDAQ 100, NVIDIA, and Bitcoin all stalling or turning off of major resistance in the weekly time frame. Same thing for Apple. Apple trying to rally up this week, but you've got this major resistance. We got a topping tail when we turned off of this level. We're testing it again, but you've got this major channel and Apple also going up, slamming into resistance.